All right, traders, good afternoon. This is Christian from Traffic Trade Group, and this is your end of day recap for Monday. It is, what is today's date? Sorry, it is August 21st. Oh, let me go ahead and turn on the, where is this? There we go. Hope everybody's having a nice day. Let's get to the markets. It feels like we oh geez, do I say this? It feels a little bit like deja vu all over again from what we've experienced maybe a couple months back. I think this was the biggest move down in the S&P since June. So let's dig into the charts really quickly. But yeah, I mean, it was a pretty nasty breath day, as well as market breadth, as well as like basically everything that we kind of talked about last week in terms of interest rates going higher and the dollar going higher as well. So again, those very briefly mean they're basically headwinds, and they're headwinds especially for your growth stocks. But yes, kind of going back to what we experienced maybe, in here. Now, again, this is completely different. So I don't want to make this comparison other than just the fact that once we started to kind of break down here, the market really didn't give you a breath, right? It didn't really give you a chance to catch up. And just the last couple days reminded me a little bit of that, because if you're in some trades and you're like, hey, I'll get out with this bounce if it bounces a little bit. That when this happened back in here, you didn't get that, and again, that's kind of like in a normal market, in an uptrending market, in a better acting market, that's perfectly normal to say, okay, I'm down in this position. Let me get a little bit of a bounce, and I'll get out of that. But when you have a severe move like we had back in June, and again, I'm kind of stuck on that because they said that the S&P has been down the most, the biggest one-day move since back in here. But so you're gonna kind of, you have to keep that in mind, that if right now, if you're stuck in a position, you could get, the logical thing is that you do get a bounce, but you may not get one. The market has liked to penalize both the longs and the shorts this year, right? It has gone up a couple times very quickly, to the upside. So it's been trapping shorts, right? And on this flip side, if you're long if you're over the tips of your skis long, right, you get trapped in this market too, right? Because it's not letting you get out on a bounce. So it's very tricky. And I think that, ultimately being a risk manager and saying, hey, this is my stop, I'm out, or unless it's like me, I have a couple positions where I said, hey, well, I actually want to build a position in something like an ENPH. So, I basically have that one on a little bit past my original stop. But for the most part, all my other trades, and it kind of stinks when it happens. You hit a stop, and you take it off. But that really, while it's not fun when that happens to get hit, to your stops get hit, it really kind of keeps you in the game and keeps you in this market. So why don't I go over a little bit some levels to watch? So clearly on the upside, 200-day moving average, we've gone right through the 20-day moving average, no problem. And notice here in the S&P 500 too, I use this 5-period moving average. I talk about it a lot, especially when we're trending. But once we went ahead and started to kind of sink back below that, and again, it happens pretty quick, right? This was Thursday where we started to kind of move down, and then Friday we broke the 20-day, this 5-period moving average, and it started to slope lower, right? And then this is a difference of a good percentage, right? So what's the percentage change in the last couple of days? We'll get to Palo Alto, by the way. We won't talk all negative. But yeah, I mean, we're looking at, in SPYs, that's, 3.4% in 2 days. And it's even more drastic when you look at the Qs. So let's put the Qs in here just to see what the 2-day move is. All right. And when you look at the Qs, you're looking at about a 4.6% move in 2 days. So that's what I mean in terms of, getting trapped. This market can move very quickly. We've seen that a few times this year where once it starts to pick up velocity, it just starts to move. And one of the things that I said in the trading room today, I said, hey, I'm like, sellers are in control. As soon as we kind of got to the open, right, you could see like a couple times these 5-minute bars are great indicators for you, because there will be a couple of times where price tries to kind of turn, and by the time that the 5-minute bar closes, it can't get above any of the the moving averages. So we did get a little bit of a reprieve. Again, where do you get the reprieve? Well, it's usually at lunchtime. Why is it at lunchtime? Because there's no volume that trades, right? I know a lot of traders nowadays, they love to look at the anchored VWAP. Right. Well, where that came from was the VWAP algorithm, right? And when I was an institutional trader, I know that that's one of the most frequently used algorithms, because it's very easy. If a trader wants to execute something over the day, they say just VWAP it over the day, right? And that means that they're slicing an order in increments over the day, but they don't trade much over lunchtime, because there's not a lot of volume there around the lunchtime period. All right, so then things really begin to pick up, usually towards towards like 1:30, right? And that's any VWAP curve, right? That's how systems have the VWAP algorithm, right? And it's not a predatory algorithm. It's just taking an order and slicing it evenly based on a historic VWAP curve. So again, more volume in the beginning of the day, hardly any volume in the middle of the day, and then the volume really starts to pick up in terms of what they're executing. Right. And again, all it basically is, when you're sitting in the seat, right, and someone wants that order specifically, they say, because they could be buying something on one side, selling on something on the other side. So they want to match that up, right? So there's not that much slippage. But basically, it's like 2 or 3 clicks, VWAP over the day, and and that's it. And the computer just, slices that order up, right? And again, there's nothing predatory going on there. It's just how an order is executed. But again, when you have breadth like we have been having, right, it's pretty easy to see that the sellers are in control for that day. That's just how it's been going for a lot of times. In the beginning of the day, we took out one of these version point of controls, right? This was from this is the point of control for last week's value area, right? So that was taken out, no problem. There is another one that's lingering down here at 41.22. So we could hit that tomorrow. We could hit that later in the week. It's possible that we don't take it out, right? But that's the previous week's point of control. Also note the other thing too is, I tend to look when we're moving down like this, kind of, in a straight 45-degree angle, as we've been moving the last 2 days. I begin to kind of look at the RSI for the indices on the 1-hour chart, right? We're pretty oversold, 27. It's even worse for NASDAQ, right, which is a 24. I think at one point before we rebounded a little bit, it was about a 17, right? Also note that this version point of control was taken out, and we don't have anything down here for quite a bit, right? So here's NASDAQ futures. Again, broken 20-day moving average, pretty decent. So we have an air pocket here between the 20-day moving average and 12. And again, I could look at this in terms of Qs, because probably more people look at the Qs. But I think the best thing to have right now is a hedge, or to be maybe taking off some of your positions in this group, if you're doing what I do, which is short-term swing trading. And basically, we talked about this in the room. I even gave a free video on Friday talking about putting on a hedge as soon as when you're trending like this. So let me go back to this. I'm sorry for me to go back and forth like this, but when we're holding above the 5-period moving average and then it breaks, simplest thing to do is just put on a hedge. And I originally put this on Friday as I said it was going to be a day trade. I kind of added back a little bit towards the end of the day, and now I'm, I'm basically in a good spot. And I set today's up so that I've got my synthetic short, right? So I'm basically short the Qs, but instead I'm using this instrument SQQQ, and I'll stay there systematically, right? Until this, until the price gets back above the 5-period moving average. Now I'll trade along with it, like I took a target, and I've been, communicating to the room that, I'll add back on a bounce. And I did that a little bit, right? So where's my entry back? Here, added back some, right? Took a target at 38.55. I didn't, think I was going to get a big bounce. So I added back just a little bit cheaper, right? And then I took some more off at 38.90. And I said, I will reload on that, right? Same thing. I said, I will add on a bounce, right? And I did add some, right? So I took some off at 39.20. I added back at basically $39. And at the end of the day, right around 3 o'clock, it was 39.60. I think where did this thing close today? Let's see. I think right around 39.54. So I think it did get worse than that. But so going back and just reviewing, it really helps to have something like this on and have a rule to say, hey, you've got something on now. I try to stay in the trade. I try to trade, like I just illustrated, I try to trade around the position quite a bit because it is triple levered. It's not just 1 for 1, right? And this way I can make some money on the short side, right? As the market is doing this, right? And of course I'll honor my stops as they go along. Kind of a little bit tricky this morning. The healthcare names started to show some strength, which I thought was logical, but they really didn't have any follow through after the first hour. Energy was kind of weak early on, but then there's headlines about OPEC and everything else. The coal names continue to act very well. Here's AMR. This is the one that I've been in. I'm only looking for 168 on this, 168.90, right? And we're very close to taking that out. Right. So that's really what's been working very well. Interesting again to see where did this thing finish up for the day. This BTU was also up about 4.5%. So the coal names have been the strongest, right? The other names, XLE was weak. I was actually in a trade from Friday and I took it off because it hit my stop. But then we got a headline and things kind of reversed. So sometimes that just happens, right? But we'll talk about something positive here for a minute. Palo Alto had good earnings. They're all the way up to 553, right? That'll get you back above the 200-day moving average. This is also giving a bit of a move to CrowdStrike and some of the other cyber plays. Zscaler, Sentinel-1, I think, is up a little bit. But hey, this is really good for the group, right? And Palo Alto has been really, really stuck, right, in this rut at the 200-day moving average. So maybe this gets this name going a bit. So again, that might be something good. But ultimately, the two things that I'm most worried about right now, well, there's a lot of worries. We have on Friday, we've got Powell speaking, which everybody is scared of. And we also have the PCE deflator. Remember, the PCE deflator is something that the Fed really looks at, right? They actually look at this. The media loves the CPI report. The Fed likes the PCE deflator report. So that's out Friday morning, same morning as Powell speaks at Jackson Hole. So I would think, because it's West Coast time, I would think that we'll have that information out. They are looking for something kind of aggressive. They're looking for a flat month in terms of inflation. So the bar has been set a little bit higher after the CPI report. So this number is going to have to come in probably negative for the market to like it, or maybe on the screws of 0. Anything above there, right? And you're probably going to see some more, you could see some more volatility. That would be the logical move. But, with this market, anything, anything is possible. But that's what the logical move would be if the PCE deflator comes in, a decent amount higher than 0. I would say watch out. But I think the market is really spooked at this point, right? You got inflation data last week from Germany, which came in like roaring higher. You've got all types of power and electrical issues going on in Europe, whether or not, the prices are literally going through the roof over there. So this market is spooked with what's going on here. So, and you could see as well, what the price is doing in some of these energy areas. Nat gas made a new high today. Crude's still behind the ball a bit in terms of what nat gas is doing, but did hang in there, kind of tested that lower S1 again. So, something is going to have to unsettle this a bit. I don't know what it's going to be, right, in terms of the situation with commodities and the shortage of energy. So that's kind of topic number one. And I think, going back to the price action that you saw today, right, that certainly is going to have an impact, right? And the VIX was up 15% today, 2380. Maybe that'll be the last thing that we look at for the day. It's a pretty deep. I was saying for the last couple of days, even on Friday, I said, wow, the VIX really didn't move up that much on the volatility. Well, now it did. So let's see if it gets, the next thing to watch out for in the VIX would be 24. And I think if we really start going above 24, 25, that we've got something a little bit more serious on our hands. That's the rule for me. 20 to 25, that's a jump in volatility. I thought that in somewhere in here we would get some type of a jump in volatility. But if we really start moving aggressively above 25, right, then that we might have something a little bit more than just that we were due for a pullback. All right, so levels to watch, in the indices, I think, which is going to be important. If we can't bounce from here and kind of regain, again, notice what I'm looking at here on the 1 hour chart. The price has been, since we started to kind of lose this back, I think this is late in the day on Thursday, maybe early Friday, right? The price has been below this 5-period moving average. Failed here, failed here, failed here, big failure here, failed here, and is trying again. So I don't know if this is going to change, right? It would be the first time that price gets above the 5-period moving average in a couple days. If that does not happen and we can't maybe get back up to 4174, then I would watch out for this VPOC to be taken out, and maybe we can get some type of digestion around there in the S&P. All right, and that is it, right? I think I went over these charts. If I didn't, but here's UUP going back to new highs, or very close to new highs, and here's what bonds are doing. They do have a test here at 137.22, but the chart that I put out here earlier on Bloomberg, right? This should give you a sense of the relationship, right? That green line, and I know the colors are kind of tough here, but the green line is the US dollar, right? And you could follow along with when this thing has really moved up pretty decently. The market has gone down, right? Here was the last big ramp up, right, in the dollar and in interest rates. So the yellow is interest rates, right? And I think I have the 10-year interest rates, right? This is not by accident. These things ratcheted up and the market got hit hard, right? So notice what's going on here. So these things need to chill out pretty quickly, because again, you could see multiple times on this chart what has happened here, right? Here was another time. They peaked here. You could see the market went down. So the market does not like a stronger dollar and does not like higher rates. All right, guys, I'll leave it there. Have a great night. See you tomorrow.